Now, super quickly, why did the Federal Reserve lower the federal funds rate, but then mortgage rates popped up just a little bit? And a variety of reasons for that. And one, I showed you before, and why I do the little chart, the federal funds rate does not determine mortgage rate. Like I said, it's the bond market. And the bond market, just think about a lot of people with a lot of money doing everything they can to understand what is going to happen in the future. So by the time these decisions are made, they already know what they're going to be for the most part, and they have already included that in their calculus and their decision making. So the reason why mortgage rates popped up just a little bit is because of this summary, what they talked about where they see inflation heading. And they don't see inflation as under control. They see inflation as rising. So even though the federal funds rate dropped, their outlook on the stability of the economy related to inflation is not as rosy. So think of bonds as like the safest port in a storm. And that is why you'll see money flow into the bond market when the economy is doing bad. If people are concerned about stock market returns and other investments, they'll just park their money in bonds because, like I said, it's a guaranteed rate of return. Their principal is safe unless the underlying entity goes bankrupt, goes out of business. That's why the 10-year treasury is the gold standard, because up until recently, probably no one expected the federal government to go bankrupt, and we still don't. But anyways, so that's what the bond market is for. And usually it's a lower rate of return, and the trade-off there is you get stability. Now, when you think about these lower rates of return, the higher inflation is, the higher these rates of return needs to be for it to be a competitive product. You know, if inflation is 5% and you're looking at bond products with returns in the threes, I mean, you're essentially losing money. But that's the TLDR of why mortgage rates popped up just a little bit after the remarks. It's because the market now expects inflation to be a little higher, which means you need to get a little bit higher yields on those products in order for it to make sense. And our resident experts are agreeing, so that makes me happy. Deserve a little more caffeine.